All right. Hey, everyone. Mark here, Mark P. Markets. Thanks for joining me for another U.S. market open price action analysis session and Bitcoin trade setup session. That's what we're going to be looking for. Again, thank you. I appreciate your patience. Thank you for pressing the like button. Just trying to, I'm running behind here. Just tough to get this thing going the way I'd like to. Anyway, so if you're new to the stream, we're going to get this thing started right away. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, let me take that off. Okay, hey everyone, good to see you all. All right, so real quick before we get this thing started, I am sponsored by 8Cap Partners. They are a broker, a Forex broker, Forex and CFD broker located in Australia. So if you're a non-US resident, you can open an account with them. You can actually trade your account through the TradingView interface, which is nice. Also, if you deposit $500 and trade one standard lot with them, you can get my training program for free. If you're interested in that, let me know. There's a link in the description portion of this video. Click on that link and it'll take you to the proper place. Okay. Also, if you're interested in my training, it's called 6 Steps to Objective Price Action Analysis. Those are the steps that I use to conduct this analysis and the day trade setups. Okay. It's just, I don't teach day trades in that program. I know that's what everyone wants, but that's not the right place to start if you're a beginner. It really is not. Okay. You may think it is, you're going to lose all your money. It's better to start with the bigger picture first. Okay. And then you work your way to the smaller time frames. It's not an easy thing. But anyway, I put that training program together to basically create an effective starting point for someone that's really trying to get a good grasp of this. Okay. But everyone, of course, goes, I'm going to learn the oscillators and all that other nonsense. And then a year goes by and they're nowhere. Okay. So anyway, that's where you can see that link as well. And if you're not in my Discord channel, there's a link to that as well. Join it. It's still free, but it's only going to be free for another week. Okay. And then I'm going to close off all the channels, all the premium channels. So if you'd like to become a member, there will be a 7-day free trial after this week. But the thing is, if you want a special price, I do have an early bird coupon, but it's only going to be for people who reach out to me specifically. Okay. I'm not going to give that price. I'm not going to send out like an email with that coupon in it. I'm not going to do that. All right. Anyway, so enough of that. Let's get into first thing Bitcoin. Right now, I'm going to try to spend as little time as possible on this larger time frame situation, because I want to spend more time on the day trade time frame. We missed some nice trades because I talk too much. Okay. So all right. So first things first. Now today is Monday. All right, which means you should all be checking your economic calendar. Now, I'm going to be streaming on TradingView today at 3 o'clock, and I'm going to talk about the economic calendar then. I usually check it in the afternoon. Okay, so I haven't actually checked it yet, but you should check the economic calendar and see if there are any notable events this week. It's very important, especially if you're a Forex trader or if you're in something that's dollar sensitive, okay, like Bitcoin. All right, anyway, so we'll go over that at 3 o'clock. Now, here's the thing. Let's talk about Bitcoin first. I had that trade signal that I sent out like a week ago or whatever at 20,250. Okay. That was based on what? That was over in this section over here. Okay. What's the low of this 20,250? Yeah. Well, it was around here somewhere. Okay. And the trade became active. And then we had that nonsense, right, with NFP. And this is what the market delivered after that. Okay. Now that trade never actually went to the stop. Now keep in mind, I don't short Bitcoin, but I put the ideas out for people that want to take those type of very aggressive trades. Okay. I short other markets, but not Bitcoin. So this move right here, I always talk about getting out early and getting out on the conflicting signal. I never sent out an exit signal because I strongly suspected that this was nonsense. Okay. Especially when I looked at some of the reasoning, it's just complete nonsense. And I know that markets are irrational. So, I saw the red candle developing yesterday. I said, all right, you know what? I'm not going to call an early exit. I'm just going to give this thing. I'm not going to say anything. And if hopefully people were patient enough, it never went to the stop. The high here is 21,465. The stop is 21, what is it? 21,750 or whatever. It was a 1,500 point stop. Okay. So it got sort of close, but there's no way that should be stopped out if you were patient enough to give it the chance. Okay. If you reacted and got out and took the loss, hey, no problem. Okay. That's going to happen. There was a new sell signal here, this red candle. Okay. And it took it out, what, 21,100. And that is in play. So that, I mean, I wasn't able to look at my screen yesterday until, only when I wrote my article. So I couldn't, I can't get these signals out all the time, right? That's why, if you have the training behind you, you should be able to get back into something like that on your own, okay? But anyway, there was a new signal that occurred after I wrote the article, and now it's in play. So if you're still short, great, just hold on to it, because if this momentum continues, we're likely to test those 18Ks again. Now, why was I suspect of this? Well, first of all, while I like to be bullish on Bitcoin, right? Since especially I only look for longs on it, this structure right here, and that's what I wrote about in my article, that structure was suspect. Now, a novice or a moron would say, well, there's a higher low at the 20K. That means this thing is in a bullish trend. This is not a bullish trend. Corrective movements are typically 3 legs. I see one leg here, I see one here, and I see one here. That's 3. Okay, so not only that, but those 3 legs developed below a key resistance zone. So as long as that's the case, right, I don't pay attention to these little minor resistances, right? Those are for like day trades and stuff like that. Okay, no problem. They don't really have any effect on the bigger picture. So this thing is still bearish. That's the point. It's still bearish. There's no reason to be going long. There's no reason to expect a sustainable rally. Have you seen the bond market? Have you paid attention to what the Federal Reserve said on Wednesday? There's no reason. And when I say that, that's not an opinion. That's with rising rates. That means easy money comes out of them. There's no easy money in the market. In order for this thing to rally and all the garbage altcoins and all the low, the cheap stocks, we need easy money. Easy money is cheap money. Okay, money that doesn't cost a lot to borrow. That money finds its way into the system eventually, and that's what leads to a sustainable rally. We don't have that. So all this irrational nonsense is nothing but nonsense. If you got sucked into that, that's your responsibility. Okay, if you believed all that emotional appeal, the nonsense of being long, and stop listening to these people. Okay, you reward them with your attention, and they continue to lie to you and trick you, and they're not lying on purpose. They just need attention. Okay, because attention converts to dollars for them, and that's their business model. Okay, but if you don't like being fooled by that, and you don't like the one being fleeced all the time, stop supporting them. Okay, anyway. So, but I need the news. You don't need the news. Cut the news off. You don't need it. Everything's here in press. I don't follow any news, and somehow I know how to navigate this thing. Okay, I'm not always right. Yeah, I get stopped out, but that's no matter what. Even if you know everything, actually, if you don't know any inside information, you will be stopped out no matter what. Okay, if you're an insider, then you probably have a much better chance. Anyway, enough of that rant. So the point is this thing hasn't changed. So I'm anticipating test of 18K. This is not a trend change. This is just noise. It's still inside a consolidation. The top of the consolidation is about 22K. The bottom of the consolidation is around 18K. All right. The short that I called out basically is targeting the range low. That's it. That's all you need to know about Bitcoin on the swing trade time frame. All right. Now let's move along here very quickly, because I talk too much. I want to take a look at the bond market real quick. If anything, you should always check like Bitcoin, right? Check the bond market, check the stocks real quick, and check the dollar, because those are the main markets, and you should be aware of where they are and what they're doing each day. Look at the bond market. So on Friday, it tried to turn right on that NFP number. Again, I don't pay attention to how NFP came out. I look at the price. I don't care how NFP came out. I care about how the market behaves as a result, because the market knows how to price it in. I don't. Okay, so I trust the price. This sucks. Okay, there's no rally going on here. This is basically sitting on the low. If this thing pushes the low, we have rising rates. The structure supports rising rates. Rising rates are bearish for everything. That's all you need to know about the bond market. Okay, that's all you need to know. No reason to overcomplicate this. Let's take a quick look at the stock market. NSX, USD. We'll take a look at the Nasdaq. I mean, all of these pretty much look the same. Whether you look at the S&P, the Dow, the Nasdaq, they all look pretty much the same because they're all highly correlated. Okay, so again, all the double bottom callers, all the big mouths, stock market bottom is in. Santa rally is beginning now. Don't miss out, right? And we're not going anywhere. Okay, so again, that type of price action, this double bottom area, great for day trades. Okay, not good for swing trades. I mean, it's highly risky. I should put it that way. It's highly risky. You cannot get into this with any type of confidence, thinking, well, that's a double bottom. This thing is going to go to this thing is the Santa rally. I'm going to make millions of dollars on this. I'm going to buy everything. That's highly risky. Okay, you're fighting a structure that has not proved itself at all. There's nothing but bearish activity here. Lower high, testing low. This thing is likely to break the low. Again, charts don't give you clean probabilities, right? There's nothing on here in this chart as well. There's a 95% chance that there's nothing like that on here. You have to know how to gauge that yourself, okay? So basically, the way I look at this is the structure favors a bearish outcome. So probability leans toward the bearish side. Can I assign a specific number? I really can't, right? So I just have to sort of make up a number, right? So I just basically say, there's probably a greater than 50% chance that this thing breaks the support because that is what the structure supports. So greater than 50% chance. Yeah, because it's slightly better than random because this trend is still intact, right? Markets are not 100% random. There is some order to them, but they're highly random, okay? So irrationality can kick in at any time. The point is, the probability, right? The structure of this thing is generally bearish. I anticipate lower prices, all right? Unless the market proves otherwise, then I adjust. So do I have some kind of opinion? Not really, because I'm open to changing if the market tells me to change. But if the market stays the same, then I stay the same, okay? I follow. I don't try to assert my worthless ideas because the market doesn't care what I think, okay? So, that's NASDAQ. Now, real quick, we're going to take a look at the dollar, and then we're going to look at euro real quick because the euro is a very interesting thing. And then we're going to do Bitcoin day trade, okay? So we'll see what kind of setups we have there. By the way, if you guys have any questions, let me know. And if you guys have any feedback, I have some ideas. You know, I'm planning to make some improvements here. It's going to take me some time, you know, because I have some people helping me with some areas. Thank you, Bill, and I got Stian. But you know, all the like the really miserable technical stuff, I have to do it. Okay. So anyway, just want to let you know. Let me just read these chat here real quick. It's good to see everyone. Bill got sawed. All right. Thank you. Shell, it's good to see you. Inertia. Oh, hey. Konstantinos. All right, cool. I remember you. Arman, how are you? Ben, good to see you, Ben. Hey, Elizabeth, how are you? I saw you join the server the other day. I was going to send you a message. Thanks for coming back. It's good to see you again. Long time no see. Hope all is well. I'm streaming again at 3 o'clock too, by the way, but I'm on every day. Okay, so that's new from since when you used to check out the streams. I have a new account. Should I email you to approve me? Well, Ben, just join the channel. You don't have to email me. It should, and if you I have a very tight security bot in there because I know about, you know, hacking and all that stuff. So, and I don't, you know, so I have very tight security in there. So just join, and if I see you, I'll just, you know, I'll give you the proper permissions. Okay. Hey, Shervin, good to see you. All right, cool. Hey, Conta, oh, from Mallorca. See, I remember you because that's such a beautiful place. Anyway, all right. So let's talk about the dollar real quick. Now, again, people are going to overreact to the dollar, right? Overreact. Oh, the dollar is bearish. This isn't bearish. This is a consolidation. This is a higher low consolidation within a broader bullish trend. It's not bearish yet. There's bearish momentum in it. Yes, that's bearish, but this is not a bearish trend. Don't confuse the two. Okay, so if this thing develops another higher low or buy signal right there, if it does, we're going to have a sell signal in the euro. Okay. And then you're going to see all that bearish pressure come back. And in the stock market, considering that with the dollar pulling back, man, the stock market sucks. The stock market is relatively weak. So if this thing rallies, I don't know, right? That says vulnerable stock market to me. That's what that says, because the stock market should be doing better on something like this, on a pullback on the dollar, right? But there's not much action there. I don't see a big green candle. Maybe we close today with a big green candle. I don't know, but that right there, that's not bearish. That's the mistake to avoid. Don't jump to any conclusions. Look at the bigger picture trend. It's bullish. It's still bullish. Okay. CPI this Thursday. So I haven't checked the calendar yet, but I'm going to. So by 3 o'clock, I'll have that. If CPI is on Thursday, then I mean that's a sensitive event these days. CPI. So that's certainly something to keep an eye on. Now look at the euro. Okay, check this out. And this is what I want to mention real quick, and then we're going to take a look at Bitcoin on the smaller time frame. So here's the thing with this euro. That trade that I called, okay, a week ago or whatever, was based on this over here, right? The short that I called. And you could go to the channel and you can see it, okay? You can see all the information because it's all there. I don't change anything. And I held that thing through the FOMC, and I was not happy with the way it was behaving on Thursday after what we were going into NFP on Friday, okay? And this thing, I had a target that was 25 pips lower than where it was fooling around. It just would not go to the target, okay? So I was short from 99.50, and this thing was just sitting around between 97.40 and 97.50. By noon at that time, I said, you know what? Screw this thing. I'm getting out. There was no technical signal. And that's the point. There was no oscillator. There was no other nonsense that was giving me some kind of magical signal to exit. There was nothing. I just knew I was not willing to risk giving back 200 pips for another 25 pips. Okay. That was what got me out. I'm like, you know what? I'm 200 pips. That's a good profit. I'm getting out. And that's it. So I put the order. I sent out an order, market order, 99.50 or whatever you can get. Just get out. Okay. And there was plenty of time to get out of that thing if you had followed that order. Since then, this thing actually, if I had stayed in that trade because I wanted those extra 25 pips just because greed drives me, okay, this thing would be negative now. In fact, this thing would be negative almost 50 pips because I was short from 99.50. Look at this thing. Okay, so that again, that goes to show my previous euro trade was the same situation. I had to manually exit. I don't like to manually exit. I like the market to just reach my target. But when it has a hard time and you're only looking at like just a few pips, take the money. Okay. And I had that situation twice with the euro, over the previous few weeks, which is kind of ridiculous, but that's the way it is. The point is, I got the 200 pips and now this thing would be negative. Don't let greed drive your decision making. If you're just trying to squeeze out a few extra pips, you have a greed problem. Okay. I'm not going to risk 25. I'm not going to risk 200 pips to make 25 pips. It's ridiculous. But that's what people do. Well, it hasn't reached I'm going to be patient. I'm going to be patient. We had NFP the next day, and I know that the outcome could be random. I know that the outcome could be adverse and not go with me. Okay. And I wasn't willing to take the chance when I had that much profit. Meanwhile, a few days earlier, the euro was fooling around. It was like 100 pips my way, and then it would go like sort of against me. I was willing to give it a chance through NFP. I'm sorry, through the FOMC meeting. Why? Why was I willing to give that a chance? Well, because first of all, I hadn't really justified my risk at that point, right? I was basically fluctuating between even and 100 pip profit, right? I could have taken the 100 pips if I was not willing to take the risk, but I was risking, more like something like 100 pips or whatever. I'm like, I want to justify my risk. I'm willing to take the chance. And that's what allowed me to stay in through the FOMC meeting. I had no idea how that FOMC meeting outcome was going to come out. I had no idea. Okay. I had no opinion. I wasn't sitting, well, they're going to come out hawkish, so I should stay in the euro. Nothing like, no nonsense like that. It was just, I'm willing to take the risk. It was that simple. Okay. And the FOMC happened to come out my way, and the euro worked its way 200 pips lower. So that's that's the thought process. That's why I wanted to bring up the euro and illustrate that, because a lot of people, they're looking for some kind of magical thing. Like, oh, the RSI told me to get out. The RSI told you nothing, okay? And all these fools that push that on people, they think that's the solution. It's not. You have to understand risk, and if you're willing to take the risk, okay? Anyway, let's move along here. So Bitcoin. Now I'm going to go to Bitcoin perp. Let's see. Can I type in perp here? So we'll use Binance. Okay. Again, I'm just picking one. It doesn't matter who you use. You should just use whoever, if you're using a perpetual contract, you should, all these charts are the same pretty much. You should just use whoever you trade through. Okay. So if it's Binance, use the Binance chart. If it's BitGet, you use BitGet chart. Okay. It doesn't matter. Now let's move here to the 30-minute chart. Okay. So see, Elizabeth, you've never seen these before. I've been working like on for day trade setups, showing people day trade setups on this thing. All right, so we're going to start with the 30-minute chart to get some perspective here first, right? What am I looking for? Levels. Okay. For my students, step 2. That's because I don't need the bigger picture trend is really not going to be as important here. I want to know momentum and levels. As a day trader, I'm only after momentum. I have no opinion. Things can change very quickly. I just want to know levels. Okay, pretty much. So let me see, Anthony. Hey, I have a question. Might not be appropriate. Okay, if it's not, okay. I'm from a country that has capital gains tax. Okay. Should this affect my decision to attempt? Well, that's an interesting question, Anthony. Because we get some people with the tax problem. I mean, I can't really answer like a tax question. You have to decide if it's worth it for you, okay? Because the problem with the tax thing is it keeps people in position. Oh, if I sell the position, it's going to be a tax liability. Meanwhile, you then open yourself up to huge risk and you lose more money than you pay in taxes anyway. So, I mean, the government's your partner. You have to decide if it's worth it. So bigger picture would probably be at least less stressful or something compared to working with like day trades, because day trades just going to be complicated. Okay. Anyway, so yeah, that's the best way I can answer that. I really can't say much about taxes, especially if it's not non-US, but you're going to have to figure out if it's worth it for you. Okay, so let's first talk about Bitcoin here on the 30-minute chart. Why 30-minute? Because I want to get a sense of intraday levels, okay? And I want to look at some recent structure. This is as a day trader, I'm only interested in like this structure right here. I'm not going to use all that information from the larger time frames because again, I'm only after how much? 100 points maybe? 150 points maybe? Something like that. I'm not looking for 1,000 points. So it's all proportional, okay? Okay, no problem, Anthony. So here's the thing. I want to locate. I want to note some levels. So 20,000, right? That's obviously a level. We have a level over here. These are supports. Okay, 20,300 area. That's a level. We have a level right here. Okay, where we happen to be right now. Look, there's this level right here, which is what? What price is that? 20,006. So basically, it's wise to round these to whole numbers. Don't sit there and be like, oh, it's exactly this price. There is no precision in this game. Okay, so 20,650, 6 even, whatever. Okay, that's obviously a level. It's a support. Now, what kind of resistances are we looking at? Let's see. We have one around here somewhere, right around there. Okay, can I draw this level here? Okay. We have one up in here, right? Those are our resistance levels. So these are our levels. And if we want to put one up there, okay, fine. These are our levels intraday. So the next question that we have to ask here is, well, how are we behaving? Well, we have a bearish momentum that's in play right now because we've broken some of these levels, right? And we're sitting at this support. We've broken some. I see lower highs, and it made a lower low to this point. When I say lower highs, it's relative to this structure, okay? Not relative to the one back here. So we have a lower high that's established over here, okay? And we're sitting on that low. Now, we're sitting on the low, but look at this candle. So it's a possible double bottom reversal, and it's an inside bar. As a day trader, we can be very aggressive and take counter trend trades or counter momentum trades. This at this point would be counter momentum because the general structure is bearish. Okay, so if I'm taking a long, if I'm interested in a long, it's not that it's wrong. It's just I should not really be very expectant of it. Okay, it's more likely to fail, but it doesn't mean it will always fail. And I would be targeting this area here to see if you get a test of that. It's possible. Okay, so now that's our bigger picture for the day trade mentality or the day trade time frame. Hey, Alex, seems like a place where experienced guys meet with others with money and yeah, well, pretty much that's a nice way to put it. Yeah, when you're on this time frame, you're playing in the NFL, okay? And like if you only have like a year or two of experience, you're the Pee Wee League kid trying to play in the NFL. And I keep telling people that they don't want to hear it because this is glamorous, this game here, and people think like this is where they're going to make all their money, and they're absolutely mistaken. Okay, this is the worst way to start, but people want to see it, so I'll show you. Okay, but I would never recommend starting out this way because there's too much that can go wrong too quickly. And if you don't understand, I mean, imagine like all the factors that have to go through the mind of an NFL quarterback, right? At the speed that defense moves. Okay, I mean, I don't sit there and watch hours of football, but you just appreciate like how quickly this person has to make that decision. Right, with all the things that are changing, and he's got to deliver that ball. Either he gives it to a running back or he's got to throw that ball. He's got to do something very quickly. Okay, it's kind of like that. All right, except you don't have these large 300-pound defensemen chasing you around here. Instead, you have these expert traders and algos, robots that are looking to fleece you at every corner. Okay, and they're going to. So the key reflex here is recognizing when you're wrong and keeping the loss small. That's really what it is. But no one wants to know about that. They want to know, well, how can I maximize my win? It's always the first question I get. How do I stay in longer? How do I make bigger wins? It's how do you get smaller losses is the question. But no one wants to hear that. Okay. Anyway, so here we are on the 5-minute time frame. Okay. And so we're looking at this action here, and we see that we know that the general structure for the intraday is generally bearish. Okay, so we have a possible double bottom in place. So what to do here? Well, now we're looking at setups specifically. Okay, look at this. So we have this candle here, this red candle. It's basically a lower high, relative to that, and it's possibly turning into a sell signal. Okay. Especially if this current candle closes, what time is it? Let's see, we have 2 minutes before this candle closes. Yeah, we have 2 minutes, okay, before this current candle. If this candle closes like that, that is an inside bar, okay? And if the low of that inside bar is taken out, we have a sell signal. If the high of the inside bar is taken out, we have a buy signal. Okay, now you have to decide which side you're interested in trying to capitalize on. How do you know which one is right? You don't. Okay, you basically, what I usually do is I lean toward the bigger picture intraday trend, which is bearish. So theoretically, the short side should be the more probable side. Okay, theoretically, but it doesn't mean that that's correct. So correct in the eyes of the market. The market may reverse here and start working its way higher, and then you take the loss. Okay, and if it wants to establish a more bullish trend, you then look for the next bullish continuation pattern. Okay, now, and some people may argue, but isn't this the beginning of a bullish momentum structure? It could be, but it also may be just noise, right? Markets are random. So this is not a clear-cut bullish trend. This just could be the beginning of a reversal, especially off this double bottom. But this is clearly not a clear-cut bullish trend. This is not what a bullish trend looks like. Okay, that's nothing bullish about that. So that means that this is most likely noise, most likely range bound. Resistances can basically hold. Okay, if that's the case, then we could get a sell signal that may possibly take us back to like this low over here, something like that. What is that? 20,006. All right, so it's 20,006 even. Where are we right now? 20,007, basically, right? So if you get this thing short off of 20,680, that's the low of the inside bar, right? You're hoping to get 100 points, okay? So actually it would have to go a little bit lower than this low to get your 100 points out. And you're going to have to risk probably about 100 points, which is 1-to-1, which is less than ideal, but you have to start somewhere. Here we go. Look. All right, so the candle closed. It's an inside bar. So for this lesson here, for this setup, I'm going to go with the short idea. Again, this is for educational purposes. I'm not actually taking the position. All right, I just want you to see what's going on, and it's to just give you an example. If you take it, keep in mind, it can turn into a loss, okay? Just letting you know. So we have some prices, right? We know that this is the price to go, that would be the entry for the short, 20,681, okay? So if it touches that price, the trade becomes active. The stop should theoretically go up here, okay? Now, again, look at this candle. We have 5 minutes before this candle closes, right? And it has not taken out that low. So you should not be in this position. People, typically, what they do is as soon as a candle opens and it turns red, they just react. They get in. Oh, I'm short. And then it does this. Oh, it's going against me. This thing sucks. Never became active. Right? That's why now in fact, look, it turned into a buy signal just now. It just took out the high. So if you got short erroneously, you should be out. Take that loss, because this is not what a short looks like. This is actually a long now, 712. So this is at 723. It's an aggressive long. You can take it. So let's just on paper, let's take it at 725. Okay, long 725. That's where we'll say we're long from. Okay, right at the top there. Not the best price to do it, but the long signal was actually here, slightly lower. Again, even though the candle gave the signal, it doesn't mean we're going to get that best price, okay? And sometimes we're going to buy it at slightly worse price, like this. I had to buy it 10 points higher, or whatever, right? Theoretically. Now, who knows if that would have taken me a little longer, because I'm not fumbling around on a platform here, okay? We're just looking at the chart. So again, the stop would have to go probably there. What is this price here? 20,681. All right, so that's about a 50-point stop. That's not bad intraday, okay? Risking 50 points to make about 100, hopefully, that's reasonable, okay? That's 2-to-1, that's reasonable. Now, so let's see where this thing goes. All right, this candle should close strong, theoretically, if this momentum is going to stay strong. Now, we are battling with this resistance here. All right, so, but here's the thing. If this thing was weak, here's the rationale. If this thing was weak, this should have followed through, okay? Which means people usually aren't thinking of the psychological aspect of this. If this is weak, okay, or if people react to this, they're all short. You have shorts that pile into this thing, right? They're all short. And then when it turns on them, this is what happens. They get squeezed. Now, this may fail again, which means the whole thing reverses, right? The shorts get shaken out, longs pile in, and then more shorts come in on top of that, right? Because it fails. See how it's failing? But again, we can't make any judgments until the candle is closed. It sucks in long. So I put this blue line here because that's the price that typically I would have got sucked in on, and the market may fail. That's the risk you take, okay? We'll see. So let's see where this goes. Let's see how it closes. We have 2 minutes for this thing to close. Now, if this thing closes as a bearish pin bar, but it does not take out the low, then you have to try to give it a chance, okay? Because this thing can do all kinds of things while it's open. That's why you have to let the candle close. All right, so let's see how that goes. Started with 2 years ago, okay? Went to swinging and take my time and fake day trade. Right, there's nothing wrong with paper, okay? There's not, I mean, but Elizabeth, you have a good head on your shoulders. I mean, you were a student, so I have an idea of, of how you look at things, and you're not in ridiculous mode. So you're sensible. Imagine like the new person coming in, and they're completely clueless because they're eating financial pizza and they're watching their favorite fake guru show them fake profits and fake trades that are completely random. Imagine, and then they glamorize day trade. Oh, I'm a day trader. Look at my fake Lamborghini in the background and my fake house. Right? I make millions of dollars as a day trader, and you can too. Right? Nonsense. Okay. All the thousands of all these profitable day traders, not real. Because if you look at the real hard statistics, most don't make money. Okay. They lie, and there's many ways to fake their performance, many ways. So keep that in mind. YouTube is one big fake place. It's like Hollywood, okay, but worse. Okay, anyway, so here's the thing. This thing closed. All right, now what can we make of this? Ooh, that's interesting. All right, so I can't, like I said, if it doesn't take out this stop, if it doesn't take out the stop, you just let it do its job. Here we are testing that high again. This can be hard to hold. That's why you can't react to every little thing. Okay. If you're very reactive, or if worse, if you're looking at a 1 minute chart, you'll be all over the place. You'll be long, you'll be short, you'll be long, you'll be short, and you'll be like, oh, I can't make any money. My costs are $300 in trades. Exactly. Right. So that's why I use a 5 minute for Bitcoin. I've experimented with smaller time frames, and they're too noisy. Okay. I would not go short there. For me, it seems like more of a middle range. Right. But again, as a day trader, are things you have to be more flexible as a day trader, and that can mean a lot of things. The candles were a bit too big for me. Okay, so and that's okay, Alex. But again, as a day trader, like I have very conservative rules for a swing trader, but as a day trader, I'm actually a lot less conservative because you have to be. All right, markets move, things change really fast, and sometimes you have to be very aggressive. And there's just no technical way to determine, should I be aggressive now or no? You just have to decide, like, are you willing to take this chance? It's hard. And the thing is, you have to be willing to take the loss. So like I do this with the S&P. What I'm showing you right here, I do that with the S&P. The S&P, you want to talk about ridiculous noise? I mean, the S&P is hard, okay? But it's like playing in the NFL, and something goes wrong, I'm out. No question. I take the loss. No problem. No question. Smallest loss is the best loss. All right. So we'll watch this here for a couple more minutes, and then we'll call it a day. But as you can see, so for this example, I'm long from up here, and it's not doing that great. I mean, this thing is what I'm long from 23 to 20 points against me. So with a 50-point stop, 50 points is a good loss for a day trade on Bitcoin, especially since typically I would be open to risking 100 points, right? Something like that. That's more reasonable. And again, you're looking for 100 to 150 points, possibly 200 points if it's a very aggressive move, possibly. But that's not really a common thing. Although many may tell you, oh yeah, I make thousands of points a day, right? Nonsense. I see these ridiculous algo things where they call it grid. They trade on some kind of grid. I don't even understand what it is. Oh, returns 15% a month. Nonsense. Complete nonsense. And then they try to sell that to you. Okay. Anyway, all right. So we'll judge this candle here. Let's see how it closes. I want to see how it closes. Each candle close gives us an opportunity to make a judgment. Okay. Now, if this candle just goes straight to the stop, then that's the market telling us it's made its choice for us. Okay. And it might, but we have to see. So that's why you can't sit there and judge these things intra-candle. Let it close. As we saw earlier with this previous candle, 1 minute it looked weak, and then it popped back up a bit, and then it looks weak again. So, this is just noise. The market's not really in play. And like I said before, I was leaning more toward the bear side to begin with. But, this thing wanted to find some bullishness. Okay. Now, another thing that can be interesting to check, we'll just check this real quick, is let's take a look at the S&P. Because they're correlated. All right, what's the S&P? Oh, look, S&P. This is the S&P on the 5 minute. Okay, look familiar? So if S&P continues like that, Bitcoin's probably not going to go much higher. All right, so keep an eye on that. People don't check those intermarket correlations. You should. See, look at that, right? Looks very similar. So S&P may stop us out. That's why you need to be aware of that. These things don't trade in isolation. Okay. So let's see how this thing goes. Now, Bitcoin can be affected by other variables, but it tends to follow the S&P. Okay. That's the average behavior. And that's what you have to look at. Stop focusing on outliers. People always bring me this special thing over here. And you have to look at the average behavior, okay? Stop focusing in on these little isolated things that don't mean anything. Okay, so there's the close. Let's make the judgment, and then we'll wrap this up. So, okay, this candle here, let's make it bigger. I mean, it's a red candle. It's not a pin bar. This resistance is basically in place, right? We saw, and we looked at a weak S&P. This resistance right here is basically established. I mean, look, it's a lower high. If I can just draw this stupid rectangle, okay? This is basically a lower high. It's a resistance area, right? The market's rejected it, and this thing looks like garbage. All right, so I would exit 684 out. Okay, it hasn't actually reached the stop, right, which was a little bit lower, but there's no reason to hold on to it. So I got long from 723, right? Yeah, about 723, 684, about 50 points out. Take the loss. Take the loss. So I told people, paper trade this thing. Don't trade it with real money. We can lose. Okay, and that's it. Now, doesn't mean you reverse and go short. A short may develop off of here, but it may not. We may get another buy signal. So that's why you don't just reverse and go short, because then you're just churning yourself. Okay, does that make sense? Because again, if this structure wants to stay in play and it reassert itself, we'll get another buy signal sometime very soon. You don't want to be on the wrong side of that. So that's it. You get stopped out. You let this thing, leave it alone for a little while and see how this thing plays out. That's it. That's the way it works. All right. As you notice, I have no nonsense on my charts. Okay. I have no oscillators. I have no special magical gimmick nonsense moving average, nothing, because you don't need it. That's all just extra layers of complexity that you don't need. I'm able to make these decisions with candles and levels. Okay. Less is more in this game. The retail trader is there to be fleeced. That means all the information that everyone's so happy to share with you is really made to lead you to take action of some kind. And if you take action of some kind, you spend money, right? So you're being fleeced. Understand? So with that being said, less is more. The less information that you consume in this game and the less information you can use to make decisions, the better. Okay? More is not better. So see what I mean? So you see what I mean here? If people just got short on this, oh, it's a short, it's a short. It's not a short. It's suspect right now, right? And if this turns into a bullish pin bar, you will see another buy signal develop. I'm not going to wait for that one. But if this turns into a bullish pin bar, so we got stopped out for 50 points. If there's another bullish pin bar and you go for the aggressive long, you at least have a chance to make those 50 points back, possibly more. Okay, if this thing starts to push this resistance area. Again, you can't have opinions. Right? So even though the structure is generally weak or range bound, it doesn't mean bullish momentum won't come out of anywhere. You have to have a very open mind. You cannot have any opinions as a day trader. None. You can't go, well, let me see what the news is. No. Okay. All right. So that's it. So I hope you got something out of this stream. I hope you learned something. You know, again, I'm going to do these setups just so people can see what it's like, what the thought process is like. Okay. Just watching me do this, you're not going to just, oh, okay, I got it. And you're not going to be able to just do this on your own. There are some things you have to learn, and there are some concepts that you have to embrace before you have the mental flexibility to think this way. Okay. Anyway, so hey, thank you for watching. Again, check out my links in the description portion of this analysis. Elizabeth, by the way, I set you up for the training server. If you check in there, you'll see that you have access to other rooms because you're a previous student. I'm going to be bringing more students. That server is still pretty quiet. I'm going to be bringing in all the students soon so that there'll be some activity there as well. Okay. Anyway, all right, you guys. So hey, if you guys have any questions, you can always come to my stream tomorrow. I'll be on today again at 3 o'clock for those of you that who want to watch me again. And that's it. Otherwise, you know where to find me. Enjoy the rest of your day, or the rest of your evening, wherever you are in the world, and thank you for watching.